Imagine you're a home builder and you come out and you're building homes for people, their dream homes, and you've got contracts, and you find out 68% of your contracts with home buyers, with your clients, with your customers were canceled. 68%. Now you tell me, as a home builder, when you get 68% of your contracts being canceled, do you think you're going to go out and hire more people? Do you think you're going to go out and spend more money? Do you think are you going to probably do some layoffs because you got to cut the cost? Do you think you're going to build more? Do you think you're going to be optimistic about the future, especially when 68% of your contracts have been canceled? Well, guess what? This is a real life story that's happening right now, and I'm going to talk about it. Now, before I get into that, my name is Daniel. I run InfraVest. InfraVest is an organization that promotes financial literacy. We teach you about macroeconomics. We have courses on this. You can check out the website at www.infravesting.com or check the links in the description below for any materials there. If you like content like this, like to know what's happening about in the markets, how the world works, macroeconomics, how it relates to the financial markets, then feel free to subscribe to this video, hit the like button, and share this with your friends and family. Now let's get into it, right? KB Homes, and I'll put the link in the description for you to follow this thread. It's on Twitter. And you could read through it as well. KB Homes, a large home builder, just reported 68% cancel rate, meaning that over 2/3 of home builders walked away from the contracts in the quarter, and this is 2022 Q4, leaving KB Homes with a massive pile of inventory. Last year, the cancel rate was only 13%. So when you compare last quarter to the year before, same quarter, Q4, right? 2021 cancel rate was 13%. And year later, it jumped to 68%, right? Because we know that all of last year, 2022, since January and onwards, we had nothing but rate hikes, and rate hikes. And we're starting to feel the pain and the pinch of the rate hikes. We're still early on. I mean, we're now in 2023, so we're starting to feel the pain, right? It takes about 6 months to a year for that pain to settle in, to come in and show what it's like in the markets. And guess what? The Fed continues to hike rates over and over again. So when you get news like KB Homes, one of the largest home builder coming out, 68% cancel rate, you can expect how a lot of home builders and other home builders and companies and corporations, and like you're seeing with the tech, the layoffs, you can see that this is just the beginning. And I keep saying this over and over again, like a broken radio, whatever the saying is. I think that's the same. But let's go through it here again, right? This is so in this thread, the second post basically said this type of cancellation rate is even worse than what happened in 2008 crash. That's crazy. Back then, builders like D.R. Horton peaked at a 50% cancel rate, and we already blew past that in late 2022. So back in 2008, when we had this huge housing crisis, right? You had a cancel rate from D.R. Horton about 50%, and now you have another big company such as KB Homes hitting 68% and blowing past 2008 levels. Higher inflation, higher rates, higher mortgage rates, they're going to definitely throw a lot of home buyers away. People are going to back off. And that's going to create the inventory to go up, especially if a lot of these companies out there and that are constructing homes and people are just canceling their contract. They're going to have a lot of homes in the US sitting there for people to buy. And if the inventory goes up, if we know what supply and demand looks like on a chart and we know what the effects are, when you increase the supply, you bring prices down lower. So this is one avenue that if this continues and the supply continues to increase, then yes, you can get a correction in the housing market. You can get a massive move down in the prices in real estate. What is that level? We don't know, right? I think base case, it's normal to argue, let's say 20% drop in the prices, maybe 30%. Will it be like 2008 style? I mean, when you look at data like this, it's pretty scary to see. But definitely looking at data like this and talking about the inventory levels and the supply and the demand, definitely there's gotta be, I will be shocked if there is no correction in the housing market. So moving on, the result is a massive pileup of new home inventory. Data from Zonda shows that national quick move-in inventory is now around 32,000. That's up 200% 1 year ago and up 50% from pre-pandemic 2019 levels. So inventories are climbing up at very rapid levels, right? Here's another one. And there's even there's even more new homes coming in 2023, right? When you look at, let's say, the construction, when you look at the the housing data, the macro data there, it's showing that as builders have cut back on the starts, they're still building nearly 800,000 single-family homes actively under construction. So yes, housing starts have dropped. Yes, people are not going out and saying, okay, build me a home, but they still got a lot of homes that are being built, and this number, 800,000 single-family homes, this is near the all-time highs back in 2006, 2007. So it's approaching that level, very, very close to all-time highs. And 800K is still a very large number, even though it hasn't reached to that 2006, 2007 level. So still a lot of inventory is coming in. So here's the fact of pattern for builders. You've got horrible home buyer demand, record cancellations, current inventory, highest level since 2015, future inventory even higher based on homes under constructions. And you would think based on that, builder stocks would be tanking. Now, what's very interesting is with these numbers that are out, and when you read through this thread, KB Homes is actually doing well in its share price. The stock is basically up 12% in the past year. The stock is basically up 85% over the 5 years. And you have all these numbers that are coming out about the inventory high, the cancellation rate, right? Home builders and demand basically crunching. The demand is basically lost in the market. It's not coming in the market. No one's really buying. And you've got a supply increase, a low demand, and yet the stock is still up. What's going on? Doesn't make any sense. So definitely this is a red flag. And on top of that, let's not forget another big private equity firm, KKR, just talked about withdrawals. They're limiting their withdrawals. They're feeling the pinch, the pain. Not only KKR is not the first company to mention this. You've got Blackstone, you've got BlackRock, many other big, gigantic private equity firms, worth trillions of dollars, unable to take their money out of the real estate market, unable to pay their investors back because the houses are illiquid. They're not like a stock where you can sell it off. So possibly what these companies may do is, the private equity companies is just going to tell their investors that, hey, you got to wait and then suck it up, and only maybe certain amount of money can be withdrawn. And but if I say if there's a black swan event that yes, these big institutions need to sell at any price possible, it will cause a massive, massive, massive trickle effect in the prices of real estate, the economy. Economies heavily heavily reliant on the real estate market, US, Canada, you name it. You can expect in certain areas, like for example Canada, which is much more in a bigger bubble in terms of real estate and its prices than other countries like the US, depending on certain areas, of course, right? Some areas in the US, some states are much more bubbly than the others. But Canada as a whole definitely in trouble if this were to really spill over into that market and something were to basically pop, this big debt bubble, right? This massive investments and low liquidity and private equity firms, right? With the higher rates. I mean, imagine if rates, right now the markets are betting that rates are basically going to pause very, very soon. 5.1% and then we're done is what the markets are thinking. Imagine the Fed doesn't deliver on that, right? I mean, they don't have to deliver on that. I should choose my words wisely, but basically the Fed has told us 5.1%. They can change at any time. They can go higher, right? The markets are expecting 5.1%, but they can go to 6%. They can go to 7%, 8%, 9%, 10%. Of course, that's not my base case. I'm not saying this is going to happen, a black swan event. But definitely when you hear news like this, when you hear signs like this, when you hear, private equity firms having problems and these big gigantic companies, and you have also, the news of these home builders seeing a cancellation, inventory building up. Yes, inflation is coming down, but inflation is coming down because the rate hikes, we're seeing the effects of the rate hikes now kick in, now creep in. This is all just the beginning. This is all just the beginning. Now, of course, I don't want the black swan event to come, and I don't want anyone to get hurt from this. But you have to really keep an eye on this and have to watch out for the signs, because if there is something like this to come out, then you can anticipate what's to come in the future, and you can plan according for what's to come in the future and have backup plans for if those scenarios come, right? You've got a couple of scenarios, scenario A, B, C, D, lay them out, all out, and be prepared. You don't want to be worried, you want to be prepared, right? So definitely, base case is 20% drop in real estate prices is not far-fetched. It's not something that is crazy out of the woods. That I would say is the base case, and then something more extreme would be some sort of black swan event like these private equity firms or some spillover effect or a debt bubble bursting. We don't know what exactly it is. That's why it's called a black swan event. So anyways, let me know what you guys think. Check out the link, the thread. I'll post it in the description for you to read up on it. Leave a comment below and let me know what you think. Hit the like button, the subscribe button, bell icon to be notified on the next video, and I'll see you guys around. Cheers.